Today, what we're going to go through is we're going to go through the purchasing process. We're going to create a purchase order, receive goods in. We're then going to put away our inventory into different bins. And then we're going to create a vendor's purchase invoice that we will then in turn pay. So we'll go through this process. We're not going to go through every different scenario that could apply, but we're going to go through the main scenarios that we generally see come up in different clients' instances. We also have on the agenda today some inventory transactions. So we'll go through some basic inventory transactions that would happen without a purchase order or a sales order, but just how to move your inventory around. All right, so first what I'm going to do is I'm going to start off from creating a purchase order. So here I'm going to look at a list of purchase orders. I'm just going to point out a couple of things about purchase orders. First off, whenever you create a purchase order, it's going to stay in the system for all time. It's not going to be deleted at any time when goods are received or the invoice is created. You're always going to have the purchase order history here. And what's going to happen is the document status field is going to be updated. So as things happen to the purchase order, it's going to go from being an open purchase order to having a receipt created. If partial receipts happen and there's some back order, the document status will change to back order. We also have a status of all received. That means everything on the purchase order has been received, but the invoice, the vendor's invoice, has not yet been processed. Once the vendor's invoice has been processed, the document status goes to completed. So this is the best way to look and see what the status of all your different purchase orders are, to kind of keep track and hold the information and filter on different information. So what I'm going to do is I'm going to just create a new purchase order, and I will enter a vendor that we're going to be purchasing from. As soon as I select the vendor, all of the default information that comes from the vendor or company setup will be populated. A couple things that I want to point out are the order date is originally defaulting to today's date, so whatever today's date is. And then we have an expected receipt date in the header that defaults to what we've defined in the company setup. And we went through the company setup last week, but I can just kind of bring it open here because there are a couple things that are going to be utilized through the company setup. One of them is the default days to receive. So you can see here I have that all purchase orders by default are going to be received within 7 days. That's where this calculation comes from. So if you need it to be changed for a specific purchase order, obviously you can do that on the header. This is the expected receipt date of the header. As we enter lines in, you also do have an option to enter a different expected receipt date for different items that are on the purchase order. So all of this helps in planning, right, when you're planning on getting your goods in and your kind of supply and replenishment planning. We also have information that came over from the vendor. You'll see here the payment terms are set up as 2% 10 net 30. So as I go through and process the invoice, it's going to automatically suggest that the payments will have a 2% discount if we pay within 10 days. The main warehouse is defined, and that's just because that's our default warehouse where we initially go to receive goods in. If we need to change that to a different warehouse, we can also, we can select that. We have different shipping agents. You can define UPS, FedEx, however you want the goods received to you, shipped to you, any contact information. And then we also have here just basic default address information that's automatically populated from the vendor. If you need to change it for whatever reason for a specific order, you can certainly do that. And then we have here a checkbox if this is a return order. We're not going to go through return orders in detail, but if there's any goods that you're going to be returning back to the vendor, you would create a purchase order and just select that this is indeed a return order to the vendor. And we also have just a basic text description field. All right, so that's the basic header information. Now what I'm going to do is I'm going to add some lines in here. So I'm just going to click on Add Lines. You can enter here. Now last week we did go through the vendor item setup with cross-references. And the cross-references is where you could enter a different the vendor's item number. So if you have either your part number would be defined in the item, or if the vendor is set, if you have the item set up with a vendor's item number, you can enter the vendor's item number in here. So for example, if I enter UN 7000, this is the vendor's item number. System will look through and bring out your part number. So our part number is demo 7000, but for this United National vendor, their part number is UN 7000. So either way, it'll bring up the same information. And then we can define what the unit of measure is that you're purchasing. By default, it's going to come to the default purchase unit of measure, which is case. And we can enter in how many cases that we're going to be purchasing. And the unit cost is going to come in automatically populated. It's either going to be coming from the item itself, or if we had set up purchase prices, which we had gone over last week a bit for some of the items, if they have specific vendor purchase prices, the unit cost would come from there for the vendor specific pricing. But you can come over and override this if you'd like. I'm then going to enter another item in. We can see some examples. So here, this first item, this is a lot tracked item. The second item is not a lot tracked item. So we can just see the example of how those two are processed. And you can see as I entered the item number, the vendor's part number automatically populated. I'll enter a quantity here. Unit cost, it's fine. And then I'm also going to enter what we call a service item. And service items are inventory items that don't hold inventory. They're set up as an item. I'm sorry, they're not inventory items. They're items set up as an item, but it just doesn't hold inventory. It's a way to either be charged from a vendor or charging your customer onto a sales order. So I'm going to enter a service item, which is for packaging, because the vendor is going to charge us some packaging costs. So I'll just enter a quantity in here, and whatever the unit cost, you would enter the unit cost that the customer's charging you or the vendor's charging you. And you can see as you're entering the information over here, the total is going to continue to calculate. So you can always see a running total of what the cost of the entire purchase order is. There are some other fields here. If you do have a discount, you can enter any discount percentage if they are giving you a discount. And this will just be treated on top of the unit cost. It's just going to take a discount off of it. All right, so those are the items that I'm going to enter onto the purchase order. And then I'm just going to click on Save. So now I have my purchase order created. The document status is open because nothing's happened to this purchase order yet. And then I have over here, I have my 3 items. If I scroll in the header information, you can see the billing information, and then I have totals, right? The total quantity that's going to be received in, and then I have my total order costs. Once I have the purchase order created, I can print a purchase order right from here. And this is just our default PDF document that's been created. Some basic information is going to be listed here that you can send to your vendor. All right, so once we have our purchase order entered in and created, the next step of the process would be when you receive goods in. So when goods come in and you the first step you're going to do is come to locate the purchase order that you received the goods in for. And then right from here, you're going to create a warehouse receipt, which is using this Create Receipt button. What this is going to do, it's going to create a new document, and it's going to pull any inventory item on the purchase order onto a receipt so that you can receive the goods into your inventory. All right, so once this is created, you'll notice here the warehouse receipt lines, we only have 2 lines, even though we had 3 on the purchase order. That's because there are only 2 inventory items. That packaging item, which was a service item, is not going to come onto the warehouse receipt. These are only goods that we're actually physically receiving in. What you can do is, this is going to come in by default, the entire quantity that was on the purchase order. I can come in here and edit the receipt if, for example, we received partial of the item. You can come in here and delete items if the items haven't come in, or you can change a quantity. So for example, we didn't receive 25 of this item, we only received 10. You can just update your quantity here. Once we go through the entire process of posting the warehouse receipt, that purchase order will then be moved into a status of back order. noting that there are still 15 of this Cape Pan item that still needs to be received in. So once I enter the quantity and I have that accurate, you're going to enter your actual receipt date that was received in. So here, this is defaulting to today. And then I'm going to save the warehouse receipt. Now you can see here in red, it has this option to enter a lot because one of this item, this chocolate cake, is a lot tracked item. So before I can actually process the receipt, I have to define the lot number. If I just click on enter receiving lots here, I'm going to bring in all of the items that need a lot number. It just happens to be this one item. So we could just enter the lot number. If there are multiple lot numbers that need to be entered, I can enter, for example, 3 here, lot quantity. As soon as I do that and tab off, a new line is being created. And this is going to ensure that we enter a lot number for the entire quantity. There we go. And then we'll just have a quantity of 2 for that. You can see here, as you're entering the lot number, the lot manufacture date is defaulting to today's date. And the lot expiration date is defaulting to an expiration date 365 days in the future, which has been set up, predefined, set up for lot tracking. That can be adjusted. That can be anything you want it to be, but that's just the default. So it just does the automatic calculation. Of course, if you need to change it, you can certainly change that. And then we have here the country of origin that you can define. It's not mandatory, but you can enter a country of origin. Once we have all of the lot numbers entered in here, we save this information. And now what you'll see back on the warehouse receipt, this enter lot button has now turned to green. So that's just indicating that you entered all the required amount of lot numbers and it's ready to be processed. So what's going to happen here is this item is going to be received into the main warehouse. And it's going to be into whatever's been defined as the receiving bin. So I'm just going to open this warehouse again, just to go through. We looked at this last week, but this is what it's looking at. So whatever we have here in this receive bin, that's going to be defaulting to what's going to be received on that warehouse receipt. So that's the default bin. So what I'm going to do as we go through this process, I'm just going to open up this item. And so you can kind of see when the transactions are happening and what the effect is. Best place to look at this is I'll look at the bin content. So here you can see for this item, we don't have any on hand currently, right? There's nothing on hand. The quantity base is 0. And if I look at the bin content here, you can see for the warehouse, for different bins, there isn't any quantity on hand. Then if I go back to this warehouse receipt and I'm going to post the warehouse receipt, now it's going to take those inventory items, put them into the defined receipt bin, which is the pick bin in the main warehouse. So once I post that, I'm going to come over here and just refresh the item page for this item. And now it's going to show you that you have 10 in this pick bin. So that's what the warehouse receipt has done. The next step, if you are utilizing multiple bins, all of your goods come into that one received bin, which is considered the pick bin. Then you can do what's called process a put away, and that will put away your inventory into different bins. The put away document can be used to put inventory into different bins, and it also can be utilized to break down inventory from one unit of measure to another. And that's based on the setup. If you say that, yes, indeed, I do want to do this, then the put away will break down into different bins, into different units of measure. But you can also define that you don't want to do that. So it's up to you how you want to handle a situation. But what we're going to do here, we have the warehouse receipt, and now we're actually going to put the items into different bins. To do that, I'm going to click on this Create Put Away button. I'm going to click on Create Put Away. So this is yet another document, and this is really going to be utilized. It's going to list out all of the items and the different lot numbers, and where you're going from what bin to what lot number it is. So this is really where you're going to define where you're going to put away your inventory. So if I click on Edit here, I can define where it's going from and where it's going to. So if I want to select a specific bin, to put all of these items in, I can do that. You can also see for this first item, this chocolate cake, the purchase unit of measure is cases, but we can break that down automatically into the selling unit of measure, which for this item is each. So this will automatically break out the cases and put them into inventory as eaches as a sellable unit. You can see this item, this cake pan, it's just an each. It's just going to go into another bin in the same unit of measure. Okay, so once I have all of that information entered, I'm just going to click on Save. And from here, I do have a document that I can select onto print instructions. So you can have this document sent out to the warehouse to know where the items need to go, what bin you're going to be moving the inventory items into, and the quantities. It's a basic document. And this, of course, can be adjusted as needed. Okay, so as I have everything entered here, now I'm just going to post this document, and that's going to actually process the movement. So once that's been completed, I'm going to come back to this same item that had the quantity of 10 in the pick bin, and I'm just going to refresh the bin contents here. And now you can see the bin content has been updated from the pick bin. Now the quantity of 10 is now in this E205 bin. All right, so that's the entire process of when you receive the goods in, and now we've put away the inventory. What we can also see, if I go back, here's my warehouse receipt, and if I go back to the purchase order, you can see here the document status on the purchase order is back ordered because we didn't receive all of the goods in. And we can also look at the lines and see that this is the original quantity that was ordered, and this is the outstanding quantity. So this has yet to be received in. So this is going to keep track of why the purchase order is still open. So that's the receiving and put away. The next step in the process would be when you receive the vendor's invoice. Depending on how vendors give you their invoices, if they have multiple purchase orders on one invoice or if they have multiple receipts on one invoice, most times the most common that I've seen is that vendors will send you one invoice per warehouse receipt. So if that's the situation, then I'm going to go to the warehouse receipt, this one, and then there's an option here that says create invoice. And this is going to generate the invoice from this warehouse receipt, everything that's been received in. And what's going to happen when I create the warehouse receipt, you'll notice here we have 3 lines. I'm going to click on edit. 2 of the lines are the items that we've actually received in, the items and the quantities that have been received in. But then also, once the invoice is created, it's going to go back to the purchase order and add any service items onto the purchase invoice that haven't been received in because they're not receivable, right? They're not inventory. So these are going to automatically include any service invoice or any service item from the purchase order. Then if here, what you're going to do on the invoice is you're going to, adjust your dates, make sure your dates are accurate, enter a vendor's invoice number, and then also you're going to make sure that your costs are correct. So if at any time the cost needs to be updated, we can change the cost. If, for example, we thought on the purchase order it was $5.25, but now we come to find out that they're actually charging us $7, we would adjust the cost here, and that'll be reflecting here in the total cost. If there's any other charges that your vendor is giving you, you can add any service items to the purchase invoice. So if I have a shipping charge, I would just enter my item in here as a shipping charge and whatever the cost is. All right, and then until we have the total quantity, we want to check and make sure our dollar amount is accurate. And then we'll save the purchase invoice. And then the next step is to post the purchase invoice. So we'll go ahead and post this. You know what, let me just remove this shipping. I think this shipping charge was wrong. It's not completely set up yet. So we're just going to create the invoice with the packing on it. All right, so now that we've posted the invoice, a few things are going to happen. One of them is the general ledger now is going to actually be hit. And this is what Rit was referring to before. So once the purchase invoice is posted, this is when your general ledger is actually going to be effective. So this is when your cost of goods sold and your revenue is going to be posted, or I'm sorry, your cost of goods sold and your inventory and your accounts payable are going to be posted to the general ledger. We also have cost entries that are going to be created. So if I view my cost entries, it's going to be the actual invoiced cost versus the expected cost. So you can see here for this first two lines, the expected cost and the invoice cost are the same. But for this last item, because I changed the cost on the purchase invoice, the expected cost was $52.50. But now the true invoice cost is going to be $70. So the system will go through and make adjustments. So even though we expected the cost to be $52, it's now going to be updated to $70 each unit. So we'll be able to see that if I look at this item. This is the item that I made the adjustments on. You can see the quantity on hand. The total inventory value of this item is now $70 since it's been adjusted from what actually occurred. And if I look at the ledger entries for this item, I'll be able to see that for this item ledger entry that's been received in, you can see here the quantity has been received in with a cost of $70. And my cost entries here will show you when the item was first received in. This is the cost entry, right? We saw the expected cost of $52.50. And then when the invoice was processed, the expected cost is reversed out, and then the actual true cost, the invoice cost, is now reflected in the cost entry. Okay, so that's inventory-wise what's occurred when the purchase invoice has been posted. And there's also a vendor ledger entry that's been created. So the vendor ledger entry is now linking to the vendor's account, and we'll be able to see here that here's a payment discount that is suggested to be paid if we pay it within the certain time frame of the payment terms that was set up. And here's the total amount. The remaining amount is $35 because we haven't paid anything yet. All right. And something that I haven't gone through yet, but on every document that we post, there's an option here that we can unpost the document. So if you notice an issue and this invoice shouldn't have been posted for whatever reason, you can click on Unpost. Unpost will post correcting entries for everything that was created. So you can see here the general ledger entries that were created. It's going to reverse everything out. So it's just going to post an actual reversal and mark these as correction entries. So it'll be easier to tell in the general ledger that these are, they're going to be zeroing out. Cost entries as well, same thing. It's going to be reversing out what we've done. And then if you need to make any changes, we can edit the purchase invoice, make whatever changes you'd like. Maybe, for example, this was actually $20 in the packaging. And then we can save this and then go ahead and post the invoice again. Now, this unpost process, this is something that you have to be assigned and given permission. Each user has to be given specific permission to be able to unpost. But so that's user defined, user by user, you can unpost or not. So you can see now that I've posted that invoice again, I have the correcting general ledger entries. So all of these are just corrections, and these are the true general ledger entries that now are open for this invoice. All right, so this purchase order now has been, the purchase invoice has been posted and completed. What I want to do is go back to the purchase order, and just to see, we still do have the document status of back ordered because we still have 15 of this item remaining. Whenever these items are received in, you would come back to this purchase order, create the warehouse receipt, and now this warehouse receipt will only have the items left to receive in, right? It's not going to bring those items back in again. So then you just kind of go through this whole process, and then you can have multiple warehouse receipts linked to one purchase order. The next thing I want to go through is, now that we have our vendor invoice, our purchase invoice posted, going through the payment process. So I have a page that's set up that's just going to show me outstanding vendor payments ready to be paid. There are a couple ways that you can pay your vendors depending on, what makes most sense to you. You can do it right from a specific invoice. So if I know I want to pay this invoice, for example, I can open this invoice and I'll have an option here to create a vendor payment. I can also, from this purchase list, select multiple invoices. You want to select multiple at one time. And then you can mass create vendor payments. You can also go in and manually enter a vendor payment and apply it to whatever invoice you'd like. So I'm going to come in here and I'm going to select a couple and I'm going to say mass create vendor payments. So it's going to take these 3 invoices, 2 for the same vendor and 1 for another. And I'm going to click on mass create vendor payments. You have a posting date here. You can define what bank account you want the funds to come from. And then you can define your payment method, whether it be computer check, a manual check, or an electronic payment. I'll just keep it as a computer check here so you can see the check that does print out. I'm just going to click on mass create vendor payments. Now what you'll see happens here, there's a batch created, which this is a grand total. So it's a total of $33,000 being sent out. And you can see here my vendor payments, it's going to have each individual vendor is going to have the total amount for each vendor that's going to be processed. And you can click on to each vendor payment specifically, and you can see what invoices here. These are the invoices that are going to be applied to this particular payment. I'm going to do all the work from here, from the batch, because I do have multiples here. And if I want to print the checks, I would click on print checks, here, whatever the next check number is going to come up. And then it's going to print out each check for each vendor. So here's one vendor's check with 2 different invoices that it's paying. And you'll see here for this invoice, we have the amount, and we are also taking the discount because we are paying in enough time. So we're going to be showing them that we are going to indeed take the discount that was provided based on the payment terms. So here's the PDF for one vendor, and then here's a PDF document for the check printing for another vendor. And then this can be, printed out to your documents or to your printer. We also have an option. We have this report print full remittance, which this isn't a check, but it's saying by vendor what invoices are going to be paid, and again, the different amounts and the net amounts. So the basic information that you've seen on the check detail, you can print out the vendor remittance. This is often used if you're just doing an electronic payments, right? You can just print out this PDF document to send off to your vendor. And then once we have everything processed here, we will need to post the batch. So this is going to post the general ledger and close out the invoices. All right, and for each of the invoices, it's going to show that the remaining amount is now down to 0 because we've paid in full. So that's the basic process to receive goods in and process the receipts and then get the vendor's invoice. The next step that I'm going to go through are different ways to process inventory and make inventory adjustments. So I'm going to go into just our GoldFinch inventory and I'm going to go into the item journals. Now, there are a few different options of how you can, of item journals that can be made. If I click on new here, you're going to have to select, whenever you create a new item journal, you're going to have to select what type it is. If it's an inventory adjustment, that's going to increase or decrease your inventory numbers. There's also an option for a cycle count. And this is a way that you can physically count inventory by bin. So if you're doing physical counts by bin, you would utilize this inventory cycle count process. That's one way to do a cycle count. We have a couple options of how to do different cycle counts, which we're not going to get into today, but there are different variations because, different companies work all different ways. But this is really if it's bin specific. Another option is to do an inventory transfer, and this is to move goods between 2 different warehouses. This is a very simple process, a simple way to move inventory from one warehouse to another warehouse. There's another function that is called transfer orders, where you create an entire order. You ship goods out of one warehouse and you receive goods into another warehouse, doing a shipment and receiving function. But this is just straightforward. We're moving it from one warehouse to another warehouse, just simple movements. And then also production journal. This is utilized if it's automatically created. If you're using a work order, you will automatically create a production journal to consume goods and to put output. to increase your inventory output. You can also use production journals if you're not using a work order, which is just kind of if you're posting more kits. So you're consuming the raw materials and then you're putting a finished good item, but you're not utilizing an actual work order. But that's what the production journal can be used for. And then we also have a revaluation journal. And this can be used to adjust inventory costs. So if you receive a cost in at a wrong cost and you can't go back and make any sort of adjustment, if it's easier just to come in here and just do a simple revaluation journal to revalue your inventory. All right, so what I'm going to go through here, first, I'm going to go through an inventory adjustment. So I'm just going to click on next, and this is going to create an inventory adjustment journal. I come in here, define the warehouse, and I define the bin that I'm working in, what bin I'm going to make the adjustments in. So once I have what warehouse and what bin I'm going to be putting the goods into or removing the goods from, I'm going to click on create the adjustment lines, and I'm going to put in the item. I'm going to say that this item, for example, what am I going to do? Either if I'm going to increase inventory, I would enter a positive quantity. If I'm going to decrease inventory, I would enter a negative quantity. So if I enter a -1, and I say that the unit of measure is each, right? Because this item contains either each or cases. I'm going to say that I'm going to remove 1 each from inventory. Here's the cost that's going to come up. You can't, you're not going to change the cost. That's going to be the default cost that's going to be coming out of inventory. And then you can define reasons. These are default reasons, right? Whether there's a counting error, receipt error, or breakage, or if it's just even scrap that just gets destroyed. These are the default reasons. Of course, you can change your reason codes for whatever works for the particular client. And you can enter your quantity, and then you can enter additional items, as many items that you want to either increase or decrease from this warehouse and this bin. So once I have my item entered in here, I'm going to click on Save. And now, because this is a lot tracked item, anytime you make any transaction for a lot tracked item, you must enter the lot number. So you can see here, we've seen this before. We have a place to enter the lots. This button here, which you can use this button, it's green, it's red, indicating that we do have to enter lots. You can either go into the screen here, or we can click on this Enter Lots button, whichever option. So here, because we're removing inventory, we need to select what lot we're going to be removing. So for this item, in this warehouse and bin, there happens to be 2 different lots. So I'm just going to select whichever one I'm going to be removing. All the default information comes in that was already set up. And I'm just going to click on Save here. And now you can see the lot number. It's turned to green, so we're ready to go. We've entered all the lot numbers that we need to. And then I can just post this item journal. Did I click on? I didn't click on Post. I clicked on Edit. Here, I'll click on Post. And I'm going to post the item journal. So now what's happened, the effect of this transaction, if I come over here to the ledger entries, I have a ledger entry that's created with a document status of adjustment. And then we'll be able to see that it's been, what's happened, a negative quantity. This is the lot number, unit of measure, and here's the total cost that was relieved from inventory. So the lot net entry has been created. A warehouse entry has been created as well. And it's just kind of defining the bin and the lot. And then we have a cost entry that was created because it was actually posted. And then we have the general ledger. When you post an item journal, the general ledger is automatically going to be posted. So we're going to be adjusting our inventory. Anything that happens with an inventory adjustment, we have it set up to go into this inventory adjustment general ledger account number. All right, so that's your item journals. Again, basically increasing or decreasing inventory. We'll be using that adjustment journal. And now what I'm going to do is I'm going to go to an item journal and I'm going to create an inventory transfer journal. And this again is moving between 2 different warehouses. So once I click on next here, up in the header, it's going to define where I'm moving the goods from and where I'm moving the goods to. So I'm going to move from this main warehouse, whichever bin you're going to be moving inventory items out of. Look this one. And where you're going to be moving the bins to, or the goods to, what warehouse, and then what bin within that warehouse. And again, I'm going to come down here, enter the items, the unit of measure that you're going to be moving, and the quantity. I just moved 5. We can move it and do a break down into a different unit of measure. If you'd like to do that, you can do that here. So you can say that I'm going to move, for example, it wouldn't work with eaches, but if I move 12 eaches out of inventory and I'm going to move it to this Trenton warehouse and move it into the unit of measure of cases, you can do that on this transfer journal as well. And then again, a reason of why you're moving it. You can enter it, you don't need to. So once I click on save here, again, I'm going to have to enter my lot numbers, and I'm just going to select a lot number. All right, and then I'll save that. And then once I'm ready to go here, I'm going to post the item journal. So now we'll look at the effects of what happened when that item journal was created. You can see here ledger entries were created. There's a decrease of 12 from one warehouse and an increase, or a decrease of 12 eaches and an increase of 1 case into another warehouse. The costing is the same. It uses the same costing. It's just going to bring it over. So the value doesn't get adjusted, but your quantities will just be moving from one bin to another, or from one warehouse to another. You can see those are the item ledger entries. And then we can also see the warehouse entries. You're going to see the more detail that it's going to be a movement is the activity type. And it's going, there's a decrease of 12 eaches from the bin E204 from the main warehouse, and an increase of 1 case to the Trenton warehouse in the pick bin. And the same lot numbers just moving over. You can't make any adjustments to the lot numbers. That must be the same. And the costs are going to be the same that roll over. You can see here, again, the cost entries. The wash, you're not going to have any effect in the cost entries because everything's going to be washing out. And there aren't any general ledger entries created either because it's just moving inventory from one warehouse to another. You're not going to have any implications on your general ledger. So that's really what I wanted to go through on the item journals. The other thing is more like the production journals. We'll go through more on work orders and cycle counting. Again, we can kind of work out. There's so many different options of how you can cycle count. But the item journals are when you're actually increasing or decreasing inventory from warehouses. There's another option where we can use warehouse activities. And this is used for movement within each warehouse or breaking bulk within each warehouse. So you're not moving anything. You can move goods within the one warehouse to different bins using a movement. And you can also, there's a break bulk function. So there's a pick option, which this you won't ever generate manually. This is an option. This is what's created from the warehouse shipment. It automatically, behind the scenes, creates a pick warehouse activity. The same thing with this put away. It's automatically created when you process the put away from a warehouse receipt. So those you won't be manually creating, but we do have options where you can break bulk, which is converting inventory from one unit of measure to another unit of measure. It's just going to break it down based on the item setup. And then we also have a movement, which again is moving inventory from one bin to another. It's all within the same warehouse, but you're just moving bin to bin. So what I'll do here is I'll do a break bulk. If I click on next, here are the different options, right? You're going to just define what warehouse you're going to be utilized in and what you're going to break out. So I'm going to add the lines here, and I'm going to add what item I'm going to break out, and I'm going to select what bin it's coming from. So this inventory item is going to filter on, these are all the bins that this item can be sitting in. You can see here all the different lot numbers. So as you're selecting the bin here, we're also selecting the lot number that's going to be adjusted. So if I select here, this lot number is in the unit of measure of case. I'm going to break down a quantity from one case, and I'm going to break it down into eaches. So I'll select that bin, it's the pick bin, and I'm going to enter the quantity. I'm just going to enter 1 case, and then it's going to say what unit of measure do you want to break it into. So you could have multiple units of measure set up for one item. This item only happens to have 2. And I'm going to break it into eaches. So I'm taking this and moving it from cases to eaches. You can also use this break bulk function to go the reverse way. So I can also take 12 eaches and make it into 1 case. So it doesn't always have to go down in numbers. You can, put inventory items together in this breakbook function as well. So once I have that all selected, I'm just going to click on save. And again, because I've selected that bin and the lot number, I don't have to define the lot number, even though this is a lot tracked item. And then I'm just going to adjust this activity. So now what I've done is here, I'm going to look at the warehouse entries. This is just creating a warehouse entry. So you can see here, it's breaking it down, what bin you've utilized. It's going to decrease one case, and it's going to be increasing the quantity of 12 eaches. So again, there's no money moved. There's nothing happening in the general ledger. The cost of the inventory is still the same. It holds the cost, and it just kind of breaks it out into each of the eaches. Another warehouse activity that's used is a movement. And this is moving inventory from one bin to another bin. So if I click on next here, it's going to see same basic setup. And we're going to enter our lines here. And then we're going to select here from the bin. We're going to click on the lookup, select which bin it's coming from. And because this is a lot tracked item, what lot number. So we can move this from this one bin, 204, and then select which bin you're going to move it to and what quantity. I'm just going to move 5 of these from one bin to another bin. I'll save this and post the activity. And now what's happened is we've created warehouse entries, right? Because it's just within the one warehouse and it's just moving from bin to bin. So you're going to see here that the quantities is going to be your negative. You're reducing the quantity in this one bin and you're increasing in this other bin. Again, no general ledger accounts. No general ledger is going to be affected, right? Because we're not adjusting the cost. We're just moving items with the same cost from one bin to another.